Hello, friends. If you are a Canadian senior, age 65 or older, and you ever use cash, deposit cash, withdraw cash, keep emergency money at home, help a family member with money, or receive cash from a private sale, then I need you to stay with me until the end of this video, because the $10,000 cash rule in Canada has just become much stricter in the way banks are enforcing it. And let me be very clear from the beginning, using cash is not illegal. Keeping your own money at home is not illegal. Helping your children or grandchildren is not illegal. Selling a car, furniture, tools, jewelry, or personal belongings for cash is not illegal. But what has changed is the way Canadian banks monitor cash activity, the way automated systems flag unusual transactions, and the way seniors can get caught in questions, delays, account reviews, and reporting situations without even realizing what triggered it. The $10,000 cash rule has existed in Canada for years. Under Canada's anti-money laundering rules, banks and other reporting entities must report large cash transactions of $10,000 or more to FINTRAC, the Financial Transactions and Reports Analysis Center of Canada. That can be one cash transaction of $10,000 or more, or multiple cash transactions that add up to $10,000 or more within a 24-hour period. Most seniors have heard some version of this rule, but many people misunderstand it. The dangerous misunderstanding is this: many Canadians think as long as I stay under $10,000, nothing happens. That is not true. The $10,000 number is only one reporting threshold. Banks can still ask questions about smaller cash deposits or withdrawals if the activity looks unusual compared with your normal account history. A suspicious transaction report does not require the transaction to be $10,000, and that is where Canadian seniors can get caught off guard. The rule did not suddenly make cash illegal. What got stricter is enforcement. Banks now rely heavily on automated monitoring systems. These systems look at patterns. They compare your current activity with your past activity. They look for sudden changes. They look for repeated deposits or withdrawals. They look for cash amounts just below reporting thresholds. They look for transactions that do not match your normal banking profile. So if your account normally only receives CPP, OAS, GIS, or pension deposits, and suddenly you deposit $8,500 in cash, the bank may ask questions. If you withdraw $9,500 one week and another $9,500 the next week, that may look suspicious even if your reason is completely innocent. If you deposit years of savings from home all at once, the bank may want to know where the money came from. Again, this does not mean you did anything wrong, but it can create friction, delays, and sometimes temporary holds. This is especially important for seniors because many older Canadians still prefer cash. Some seniors keep emergency cash at home because they do not fully trust online banking. Some pay small workers in cash, some help family members with cash, some sell a vehicle privately, some receive inheritance money, some deposit old savings after years of keeping it in an envelope, safe, drawer, or lockbox. These are normal real-life situations, but to a bank's monitoring system, they may look unusual. Now let's talk about the first situation, home savings. Maybe you kept cash at home for years. Maybe it came from pension savings, gifts, old withdrawals, garage sales, or money you simply did not spend. Now you decide to deposit $12,000, $15,000, or $20,000 into your bank account. The bank is required to report a large cash transaction if it meets the threshold. That report does not mean you are a criminal. It does not mean you are being charged. But the teller may ask where the money came from. And if your answer is unclear, the bank may ask more questions or review the transaction. The smart move is simple. Do not walk into the branch with a large amount of cash and hope nobody asks anything. Call your branch manager first. Book an appointment, explain that you want to deposit personal savings, and ask what documentation they recommend. Bring anything that supports the source of funds. That could be old withdrawal records, tax returns showing normal income, a note explaining that the money was accumulated savings, or documents connected to the sale or inheritance. You are not trying to prove innocence. You are making the process smooth. Now let's talk about family gifts. This is where many seniors make a mistake without meaning to. A grandchild needs rent money. Your son or daughter needs help with a down payment. A family member has an emergency. You want to help, so you withdraw $8,000 or $9,000 in cash because you heard that $10,000 is the line. But this can create the exact pattern banks are trained to notice. Repeated transactions just under $10,000 can look like structuring. Structuring means deliberately breaking up transactions to avoid a reporting requirement, and that is serious. Even if the money is completely legal, trying to avoid the reporting threshold can create problems. So the safest habit is this: do not move family gifts in cash if there is a cleaner option. Use e-transfer where limits allow. Use a bank draft. Use a certified check. Use a direct bank-to-bank transfer. These methods create a record and protect both you and the person receiving the money. Now let's talk about private sales. Maybe you sold your car, truck, furniture, appliances, tools, or equipment privately, and the buyer paid cash. That is common. But when you deposit $7,000 or $8,000 into an account that normally only receives retirement benefits, the bank may ask questions. The solution is easy. Keep a bill of sale. It does not have to be complicated. Write the date, the item sold, the amount, the buyer's name, your name, and both signatures if possible. When you deposit the cash, tell the teller up front, "I sold my vehicle privately. Here is the bill of sale." That one sentence can prevent confusion. Now let's talk about regular cash users. Some Canadian seniors like using cash for groceries, repairs, home cleaning, haircuts, gifts, church donations, or small personal expenses. Cash is legal, but if your cash activity suddenly increases, your bank may notice. If you make larger than usual withdrawals, give a simple explanation. You do not need to over-explain. You can say, "This is for home repairs," or "This is for a family event," or "This is for household expenses." A natural explanation creates context. But here is something else seniors should know. Banks have account agreements. Those agreements often allow the bank to restrict or close accounts if the bank believes there is compliance risk. This does not happen to most ordinary people, but it can happen. And if your CPP, OAS, GIS, or pension is deposited into that same account, even a temporary hold can create stress. That is why some seniors keep a second account at another financial institution as a backup, not to hide anything, just to make sure they can still receive deposits and pay bills if one account is temporarily under review. Now let's talk about inheritance. This can be emotionally difficult. A spouse, parent, or relative passes away. An estate is settled, you receive money. Sometimes part of it may be cash. Even if everything is legitimate, a large cash deposit can still raise questions. Before depositing, call the branch manager and ask what they need. They may ask for estate documents, a death certificate, a will, probate documents, or a letter from the executor. It may feel unfair to explain your own inheritance, but documentation makes the deposit much smoother. Now here is the part many people do not understand. If a suspicious transaction report is filed, you usually will not be told. Banks are generally not allowed to tell you that such a report was filed because of tipping off rules. That means you may never receive a letter, you may never receive an explanation. FINTRAC receives information, analyzes reports, and most reports never lead to anything involving the customer. But from your side, what you may notice is questions, a delay, a temporary hold, or being asked to visit the branch. So let's keep the fear realistic. Most Canadian seniors who deposit legitimate money are not going to be arrested. Most are not going to lose their account. Most will never hear anything after a normal question from the bank, but the realistic risk is inconvenience. A frozen transaction, a temporary account review, a delay in accessing funds, a stressful visit to the branch, and when you live on a fixed income, even a short delay can feel serious. Now, let's talk about what you should do before moving cash. First, review your own activity. Look back at the last 12 months. Did you make large cash deposits, large cash withdrawals, repeated transactions of similar amounts, transactions close to $10,000? If yes, make sure you can explain each one clearly. You do not need to panic. You just need a simple paper trail. Second, meet your branch manager. Not every teller will know your full situation. A branch manager can explain what documentation they prefer for large cash deposits, private sale proceeds, inheritance funds, or unusual withdrawals. This is not admitting wrongdoing. This is responsible banking. Third, keep a folder at home. Anytime you deposit or withdraw a few $1,000s in cash, Write down the date, amount, reason, and any supporting document. If you sold something, keep the bill of sale. If it was a gift, keep a note. If it was home savings, write how it was accumulated. If it was inheritance, keep estate paperwork. This habit takes a few minutes and can save weeks of stress later. Fourth, stop trying to stay just under $10,000. That is the wrong instinct. If your reason is legitimate, use proper documentation and proper banking channels. Do not break one large transaction into smaller pieces just to avoid reporting. That can look worse than simply being transparent. Fifth, move family support electronically whenever possible. If e-transfer limits are too low, ask the bank for a draft or wire transfer. If the person receiving money does not have a bank account, go with them to the bank and ask for the cleanest documented option. A small bank fee is better than a confusing cash pattern. Now, what if something goes wrong? What if your account is held, restricted, or closed? Start with your bank's complaint process. Ask to speak with the compliance or risk management department. Tell them you are ready to provide documentation and want to understand what is needed to resolve the review. Stay calm. Do not ignore letters or calls from the bank. If the bank does not resolve the problem, you can escalate. Since November 1st, 2024, OBSI became Canada's single external complaints body for federally regulated banks. That means if your complaint cannot be resolved through the bank's process, OBSI may be the place to escalate for an independent review. The Financial Consumer Agency of Canada also provides information about banking rights and complaint processes, but OBSI is generally the external complaints body for unresolved bank complaints. Now let's bring this back to seniors. If your CPP, OAS, GIS, survivor benefit, CPP disability, or private pension goes into one bank account, protect that account. Keep records. Avoid confusing cash patterns. Use direct deposit. Keep your address and phone number updated with your bank. Keep your CRA and Service Canada information current. And if you make unusual cash moves, create documentation before the bank asks for it. The bottom line is this. The $10,000 cash rule in Canada is not new, but enforcement feels stricter because banks are using more automated monitoring and asking more questions. The seniors most at risk are not criminals. They are ordinary Canadians who prefer cash, keep savings at home, help family members, sell personal items, or receive inheritance money and do not realize how those transactions appear inside a bank system. So before you deposit or withdraw a large amount of cash, prepare. Call your branch. Keep documents. Do not split transactions to avoid reporting. Use electronic transfers for gifts. Keep bills of sale. Keep inheritance paperwork. And if there is ever a problem, follow the bank complaint process and escalate to OBSI if needed. This is not about being afraid of your own money. This is about protecting yourself, your bank account, your retirement deposits, and your peace of mind. If this video helped you, subscribe to the channel and share it with another Canadian senior, especially someone who still uses cash regularly. Because most people who get caught off guard are not doing anything wrong. They simply did not know how the $10,000 cash rule really works in Canada. This is Andrew. Stay careful, stay informed, and always use official sources before making major banking decisions.